What if I told you that most millionaires aren't getting rich the way you think? It's probably not day trading. It's not finding the next 100x cryptocurrency. It's not buying a lottery ticket and getting lucky. And for most people, it isn't even a massive salary. The real secret is much less exciting. And that's exactly why it works. Millionaires tend to build wealth through a combination of earning, owning, investing, and waiting. But here's where it gets interesting. The strategy that gets you from $10,000 to $100,000 isn't necessarily the same strategy that gets you from $100,000 to $1 million. And once you understand the difference, becoming wealthy starts to look less like a lottery and more like a system. So let's break down how millionaires actually build wealth. Let's start with something incredibly simple. You can't invest your way out of having no money left over. If you earn $60,000 and spend $60,000, it doesn't matter how good your investment strategy is. You have nothing to invest. That's why the first step to building wealth isn't picking the perfect stock. It's creating surplus cash flow. You earn money, you spend less than you earn, and the difference becomes capital. This sounds incredibly boring, but that gap between income and spending is one of the most important numbers in your financial life. Imagine two people. Person A earns $100,000 and spends $95,000. Person B earns $70,000 and spends $50,000. Who has the better wealth building engine? It's not necessarily the person with the bigger salary. It's the person who can consistently turn income into investable capital. And that's the first major lesson. Wealth isn't created by income alone. It's created by what you do with the gap between your income and your lifestyle. But there's a limit to how much you can cut. You can cancel subscriptions, eat out less, buy cheaper clothes, stop buying coffees. Eventually, you've run out of expenses to cut, but your income, that can keep growing. This is why many successful wealth builders focus heavily on increasing their earning power. They develop valuable skills. They move into higher-paying careers, they negotiate salaries, they start businesses, they take on additional work, or they build something that can generate income without being directly tied to every hour they work. And this creates an important distinction. There are really two levers you can pull: reduce unnecessary spending and increase your earning capacity. The first helps you create your initial surplus. The second can dramatically increase the size of that surplus. And once that happens, something changes. Because you're no longer just saving money, you're accumulating capital. This is where the wealth-building game starts to separate from ordinary consumption. Imagine you have an extra $20,000. You could spend it on a car, a holiday, a bigger TV, or you could use it to buy something that has the potential to produce income or appreciate over time. That's an asset. Stocks, businesses, real estate, bonds, and other investments can all play a role depending on someone's circumstances, risk tolerance, and time horizon. The important distinction is this: a wealthy person doesn't just ask, "Can I afford this?" They start asking, "Will this make me richer or poorer?" That doesn't mean millionaires never spend money. They absolutely do. But the key is that consumption comes after capital accumulation rather than replacing it. The millionaire mindset isn't never spend money. It's make sure your money has a job before you spend it. Now we get to one of the most powerful forces in wealth creation: compounding. And ironically, this is where most people lose patience. Let's say you invest $100,000. You earn an average return over a long period. At first, the growth might feel disappointing. A few $1,000s here, a few thousand there. But eventually, the growth starts generating growth of its own. Your returns earn returns, and those returns earn more returns. That's why the first $100,000 can feel so slow, while the next $100,000 can arrive much faster. And this is one reason wealthy investors aren't necessarily obsessed with finding the highest possible return every year. They're obsessed with staying invested, because losing a huge amount of money can set the clock back years. A millionaire doesn't need every investment to be a home run. They need enough good decisions and enough time for compounding to take over. Here's another misconception. People imagine millionaires sitting on one incredible investment that made them rich. Sometimes that's true. But relying on one investment is extremely risky. A successful business can fail. A property market can fall. A stock can collapse. An industry can disappear. So, as wealth grows, many investors become increasingly focused on protecting the wealth they've already built. This can mean diversification across different assets. It can mean maintaining liquidity. It can mean insurance. It can mean managing debt carefully. And it can mean avoiding investments where one mistake could permanently destroy the portfolio. Because there's a huge difference between trying to turn $10,000 into $1 million and trying to protect $1 million. At $10,000, you need growth. At $1 million, you need growth and risk management. Now, here's where things get particularly interesting. For many people, the biggest source of wealth isn't their salary, it's ownership. Think about it. If you work for a company, your income is usually connected to your time and your role. But if you own part of a company, you can potentially benefit from the company's growth. This is one reason business ownership has created enormous fortunes. The founder doesn't necessarily get paid more because they worked another 8 hours. They own an asset that can become dramatically more valuable. The same principle applies to investments. When you buy shares in a company, you're not just buying a number on a screen. You're buying a small ownership stake in a business. And that's one of the fundamental differences between earning money and owning assets. Your job can generate income. Ownership can generate both income and wealth. Here's where the cycle starts feeding itself. You earn money, you save money, you buy assets. Those assets generate returns, and instead of spending every dollar of those returns, you reinvest them. Now your capital base is larger, which means future returns can be larger. And the cycle repeats. Income, capital. Assets, returns. More capital. This is the wealth building machine. And notice something important. There isn't one magical step. There's no secret stock, no secret bank account, no secret billionaire investment. It's a system. And systems become powerful when you repeat them for years. This might actually be the most underrated part. Building wealth isn't just about making good decisions. It's about avoiding catastrophic decisions. You can spend 10 years building a portfolio and lose a huge portion of it through excessive leverage. You can build a successful business and destroy your finances by taking on debt you can't service. You can make a fortune and lose it by constantly increasing your lifestyle. This is why wealthy people often look surprisingly boring with their money. They don't necessarily need to take massive risks anymore. Once you have $1 million invested, protecting the capital becomes incredibly important. Because losing 50% doesn't just mean you're down 50%. You now need a 100% return just to get back to where you started. And the larger your portfolio becomes, the more expensive mistakes become. And this is probably the biggest difference of all. Most people think about money in months, maybe a year. Millionaires often think in decades. They don't need every year to be spectacular. They need the overall trajectory to keep moving upward. Think about what happens if you invest consistently for 20 or 30 years. You don't need to predict every market crash. You don't need to pick every winning stock. You don't need to perfectly time the market. You need to earn, save, invest, reinvest, and stay in the game. Over and over again. That's why wealth building can look incredibly boring from the outside. There may be no dramatic moment, no single trade, no magical breakthrough. Just thousands of relatively sensible decisions. Compounding over time. So let's go back to where we started. How does someone actually get to $1 million? Usually it's not one thing, it's a combination. Maybe they increase their income. They save aggressively. They invest consistently. They buy assets. They build a business. They own property. They receive equity through their career. They reinvest their returns. And most importantly, they give the process enough time to work. The first $10,000 teaches you discipline. The first $100,000 gives you capital. The next few $100,000 gives compounding something meaningful to work with. And eventually, your money can start doing more of the heavy lifting. That's the point where wealth becomes increasingly self-reinforcing. And here's the part I think gets lost in almost every conversation about becoming wealthy. People are obsessed with asking, what's the best investment? But millionaires aren't necessarily asking that question. They're asking, how do I build a system that keeps creating wealth? Because the best investment in the world can't compensate for terrible cash flow, and the highest salary won't make you wealthy if you spend everything. And even a great portfolio can be destroyed by one catastrophic decision. Wealth is built at the intersection of income, ownership, investing, compounding, and time. And the further you climb, the more important it becomes to protect what you've already built. The interesting thing about becoming a millionaire is that there usually isn't one moment where you suddenly become wealthy. It's thousands of small decisions that eventually become a very large number. And that's why the name of this channel is The Long Game. Because building wealth isn't about getting rich overnight. It's about putting yourself in a position where time starts working for you instead of against you. If you enjoyed this breakdown, subscribe to The Long Game for more finance documentaries about investing, wealth, and how money really works. Because getting rich might be about the short-term decisions, but staying wealthy is always about playing the long game.